combination. You can have a job and have a side business of some kind. Very common. You can have a full-time job and you can drive for Uber. And technically, being an Uber driver, you are a contracted person, so you are in business under that contract agreement. But let's look at E, the employee. You have a job. The employee has the least amount of tax benefits. You are the consumer. And what is it that the US government wants employee types to do? Well, there's generally three major tax breaks that the employee kind of gets. So I'm going to share my screen. I'll share it once I get the right thing up and share my screen. And there it is. And I got so many things here to share. There it is. So there's three major tax breaks for those in the E quadrant. You have the child tax credit, which in 2025 is $1,700 per child. And that's a credit, dollar for dollar credit into your tax equation. You have your mortgage interest tax deduction. You'll notice that when you rent an apartment, rent a home, rent anything, there's no tax break as a true employee. There's no tax deduction. But at least as a homeowner, you could deduct your homeowner's interest. And I'll get slightly technical, as long as you can itemize it, as long as all of your itemized deductions exceed the standard deduction. Standard deduction is so high, it may not exceed it. So you have to determine, does that make sense if you're buying a home purely for the tax break, which you shouldn't. You don't really want to let the tax tail whack. You want to make your decisions for your own reasons and then take advantage of every provision in the tax code, which brings up something else.